Rivian reported its Q1 earnings results. They did miss on the earnings. Revenue was slightly higher than expected though. Rivian continues losing money. Now they lose only $39,000 roughly versus $43,000 in Q4. Rivian says that in the first quarter of 2024, they hosted over 28,000 demo drives, a 91% increase versus the fourth quarter of 2023. They shut down one of their plants and they installed a lot of new robots, optimized everything, and now they think that they will see significant progress on the R1 material cost optimization efforts following the planned retooling upgrade. Despite losing a lot of money per each vehicle sold, Rivian reaffirms the goal of positive gross margins in Q4. Farzad asked, how is it possible for Rivian to become profitable? But there is a statement from Rivian which sort of tries to address it. Q1 gross profit per vehicle delivered was basically minus $40,000. It's crazy. Which includes $15,500 of depreciation. Okay. And $1,600, almost $1,700 of stock-based compensation expense. Our results were negatively impacted by $9,300 per unit delivered, primarily related to various supplier and other costs incurred in advance of the new technology changes and parts integration into the R1 platform. As part of our cost of revenue efficiency initiatives, as a result of the retooling upgrade, we expect significant improvement in the material depreciation and conversion cost of our vehicles and remain confident in our path to achieving modest gross profit in the fourth quarter of this year. It does sound that Rivian is trying to pull off an Elon Musk-like miracle. I mean, I wish them luck, but they're losing $40,000 per vehicle sold and they think it will go to above zero. The trend, however, is positive. In Q4 of 2022, they lost $124,000 per car. So now they're only losing, when I say only, it's still a high number, $40,000 basically. But Rivian has reduced its 2024 capital expenditures guidance to $1.2 billion, down from $1.7 billion. They say we also expect savings from moving the R2 launch to normal to impact 2025 and 2026. Rivian is still burning cash. They have about $8 billion left, down 13% from $9 billion from Q4. Rivian's accumulated losses have exceeded $20 billion for the first time in Q1 of this year. And the bad thing for Rivian is Rivian's cash burn actually worsened in Q1 compared to before. Now that $8 billion in cash maybe doesn't sound bad until you realize, oh, Rivian also has some long-term debt, which remains at $4.4 billion. Specifically looking at Rivian's operating margin, it also worsened to negative 123%. But I think average gross loss per vehicle, that's probably one of the most important metrics that Rivian needs to focus on if they don't want to go bankrupt. It's one thing to burn cash if you are investing more, but it's another thing to keep burning more cash while reducing capital expenditures. It's also not helping that Rivian's total revenue is dropping. And this is quite incredible. Rivian's overhead expenses increased significantly as was expected from Rivian's announced layoffs. For reference, Tesla sells over 30 times more vehicles than Rivian, but Tesla's selling, general, and administrative expenses are only about 3x of Rivian's. Rivian also is significantly reducing its average selling price. Rivian maintained a weak vehicle sales guidance for 2024 of 57,000 vehicles, implying a next growth scenario for Rivian's current lineup. This is one of my favorite charts from AJ. This shows free cash flow history of pure EV makers, and you can see that some companies are sort of trying to reverse this trend downwards. You can see it here with Xpeng and NIO, but some companies like Lucid and especially Rivian, woo, it's going down. It's a free fall. Shout out to AJ for beating Wall Street's estimates when it came to Rivian's earnings. By the way, Rivian doubled its revenue year on year and still they are losing lots of money. Check this one out. Hyundai-backed self-driving startup emotional delays plans cuts employees. The struggling joint venture with Aptiv received a $900 million infusion from Hyundai last week. So this one is probably going to fail too. In an interview, Lucid's CEO Peter Rawlinson said EV manufacturers from China are many years behind Tesla. Rawlinson said the battery and the drivetrain technologies as some of the examples where he sees Tesla having no competition from China. I will post a few exclusive short videos on the Eclipse channel. It will be very obvious when they will be exclusive. In the thumbnail, it will say recorded live, just like these previous videos there. There's one big Tesla stock investor who is going to cut the position in Tesla stock, I think. So I'm going to cover that in the video later today that I will record live on the Eclipse channel. I will put a link down below in the description of this video for you to subscribe to the Eclipse channel if you don't want to miss these exclusive videos. And going forward, I'm only publishing the full daily news videos on this channel, not on the old channel anymore. So make sure to subscribe if you haven't yet, otherwise YouTube may stop showing you these videos completely. Subscribing sends YouTube a strong signal that this is a channel you want to watch. Thank you so much for watching, and I will see you in tomorrow's episode.